Every year, $2 trillion disappears into the global economy, and nobody can find it. Not because it is hidden in caves or buried underground, but because it is sitting in plain sight. Inside luxury apartments in Manhattan, inside five-star hotels in Dubai, inside legitimate businesses on every street in every city in the world. Dirty money does not look dirty. It looks successful. It looks legal. It looks exactly like everything around you right now. In the next 10 minutes, you will understand exactly how $2 trillion of criminal money enters the clean economy every single year. Who benefits? Who suffers? And why governments cannot stop it even when they want to. Before we understand how dirty money is cleaned, we need to understand where it comes from. The global drug trade alone generates approximately $500 billion per year. That is more than the entire GDP of most countries on Earth. Human trafficking generates $150 billion. Cybercrime, $600 billion, and growing. Corruption and bribery, another trillion across governments worldwide. But here is the problem that criminals face. Cash is dangerous. You cannot walk into a Ferrari dealership and pay $300,000 in cash without triggering an investigation. You cannot buy a $10 million apartment with a suitcase full of bills. Criminal organizations generate enormous amounts of cash, but cash alone cannot buy power, legitimacy, or protection. For that, you need clean money. And that is where money laundering begins. Money laundering happens in 3 precise stages, and understanding them changes how you see everything around you. Stage 1. Placement. This is the most dangerous moment for a criminal. Getting physical cash into the financial system without detection. The classic method is smurfing, breaking large amounts of cash into small deposits below the reporting threshold. In the United States, banks must report any cash transaction above $10,000. So criminals make dozens of deposits of $9,500 across multiple banks using multiple people. Other methods include cash-intensive businesses. A restaurant that genuinely serves 200 customers a day can easily report serving 500. The extra revenue is criminal cash mixed with legitimate income. Nobody can prove the difference. Stage 2. Layering. Once money is in the system, it needs to become untraceable. This is where the complexity begins. Shell companies in the Cayman Islands send wire transfers to holding companies in Luxembourg, which send payments to consulting firms in Delaware, which invoice businesses in Dubai, which transfer funds to bank accounts in Singapore. The money makes 15 international transfers in 72 hours, each one legitimate on paper. By the end, even sophisticated investigators struggle to follow the trail. Stage 3. Integration. The money returns to the real economy, looking completely legitimate. A luxury penthouse purchased through a shell company. A yacht bought by a holding corporation. An investment in a legitimate business. Suddenly, criminal money is generating legal returns. The crime is complete. The money is clean. If you want to understand why housing in major cities has become unaffordable, you need to understand the relationship between real estate and dirty money. Real estate is the perfect laundering vehicle for 3 reasons. First, large transactions. You can move $10 million in a single property purchase. Second, anonymous ownership. In many jurisdictions, properties can be purchased through shell companies that hide the real owner. A criminal in Russia can own a penthouse in London through a company registered in the British Virgin Islands, controlled by a holding company in Panama. Third, value appreciation. Real estate generally increases in value. So dirty money not only gets cleaned, but grows while being cleaned. In London, investigators identified over £1.5 billion worth of property owned by individuals accused of corruption. In New York, Anonymous shell companies own billions in luxury real estate. The consequence for ordinary people is brutal. When criminal money competes for housing, it drives prices beyond what legitimate income can afford. Money laundering at a massive scale cannot happen without banks. And the history of global banking is filled with cases that should shock anyone who sees them. HSBC, one of the largest banks in the world. In 2012, it paid $1.9 billion in fines after admitting it helped Mexican drug cartels launder hundreds of millions. The fine was enormous, but it represented less than 5 weeks of profit for the bank. Nobody went to prison. Deutsche Bank, fined $630 million for helping Russian clients move $10 billion out of Russia. Danske Bank, a small Estonian branch, processed 200 billion euros in suspicious transactions over 9 years. They were flagged as suspicious. They were processed anyway. The pattern is consistent. The profits from processing dirty money are enormous. The fines when caught are manageable, and the individuals responsible almost never face personal consequences. When the cost of getting caught is lower than the profit from the crime continues. Then came cryptocurrency, and the debate that followed was immediate. Was Bitcoin a tool for financial freedom, or the perfect laundering instrument? Blockchain transactions are public. Every Bitcoin transaction ever made is visible on the blockchain forever. In theory, this makes crypto more transparent than traditional banking. But wallet addresses are anonymous, and a sophisticated user can make tracing extremely difficult. Criminal organizations adapted quickly. Mixing services take cryptocurrency from multiple sources, mix them together, and return different coins, making the origin untraceable. The Silk Road case was the first major crypto laundering operation exposed. Ross Ulbricht built a criminal marketplace that processed over $1 billion in Bitcoin transactions before the FBI shut it down in 2013. Today, the United Nations estimates that between 2 and 5% of all cryptocurrency transactions are connected to criminal activity. On a market of trillions that represents hundreds of billions of dollars annually. In 2016, the world got an unprecedented look inside the global money laundering system. 11.5 million documents were leaked from a Panamanian law firm called Mossack Fonseca. The Panama Papers revealed how the global elite used shell companies and offshore accounts to hide wealth from tax authorities. 12 current or former heads of state were named. 128 politicians and public officials from 40 countries. The Prime Minister of Iceland resigned within days. Investigations were launched in over 80 countries. But here is what most people missed about the Panama Papers. Mossack Fonseca was not the biggest firm doing this. It was not even close. It was simply the one that got hacked. The partners, the lawyers, the accountants, and the bankers who make these structures possible operate in almost every major financial center in the world. Legally, openly, and profitably. If governments know all of this, why can't they stop it? The honest answer is uncomfortable, because dirty money is deeply embedded in the legitimate economy, and removing it would cause enormous disruption to systems that powerful people depend on. The legal industry that creates shell companies generates billions in fees for law firms in London, New York, Singapore, and Zurich. The banking industry profits from processing international transactions regardless of their origin. Real estate markets in major cities depend partly on international capital that does not ask too many questions. And in many countries, the politicians who would need to pass stricter laws have their own connections to the offshore system that would be disrupted. This is not a conspiracy. It is an economic reality. The people with the power to fix the system often benefit from keeping it broken. Here is why this matters to you personally. Dirty money inflates the cost of housing in your city. When criminal capital competes for real estate, it drives prices beyond what legitimate income can reach. Dirty money corrupts governments. The same networks that launder criminal proceeds also facilitate political corruption. Dirty money funds the crimes that generate it. Every dollar successfully laundered makes the original criminal activity more profitable. You pay for this through housing costs, through tax revenue lost to offshore systems, through governments that serve criminal networks instead of citizens. The $2 trillion laundered every year is not just a crime statistic. It is a tax on every honest person in the global economy. The system is not broken. It is working exactly as designed, just not for you. Now you see it. Subscribe to Financial Protocol on YouTube. Real systems, real money, real truths. New cases every week.